Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Professor Kim, thank you for making time today.
Good afternoon, Devin.
So the Federal Reserve in its latest meeting has decided unanimously to keep interest rates where they are. President Trump, of course, would like to see them lower, but what was the reason for their decision, and what do you think is going to happen going forward?
U.S. Fed decided to leave its key interest rate at 1.5% to 1.75% over two straight Federal Open Market Committee meetings. The main reason for this is because U.S. economy is pretty robust with low inflation and strong employment. Actually, it is too early to talk about Fed's interest rate decision for this year because it is not clear how U.S. economy and global economies are developing for the remaining of this year. But I would say that in the first half of this year, U.S. economy is highly expected to expanding, so there won't be a reason for Fed to change its key interest rate.
Well, yes, there certainly are a lot of issues up in the air right now, including the coronavirus. And so Wall Street stocks closed very little changed overnight. What's the story in the global financial markets?
Coronavirus outbreak gave, of course, a negative impact on global financial market. However, since coronavirus damage is not over yet, real impact is not yet reflected in global stock prices. Yesterday's New York stock market is mixed with not changing interest rate and coronavirus outbreak. Europe's market, including London and Germany, actually slightly increased. But in today's Asian markets, there was a huge drops in stock prices. In Nikkei by 1.7%. And Shanghai dropped by 2.7%, and Hang Seng of Hong Kong dropped by 2.3%. So it was such a bad day for Asian stock market for today.
Yes, indeed. And Korean stocks also sharply lower today. Their second big drop in just a few days. What's going on there?
So Korean stock market should be bad like that of the Asian stock market because the Korean economy is highly related to China and other Asian countries. As you said, domestic market is also attacked by coronavirus outbreak today. Kospi dropped by 1.7% and Kosdaq dropped also by 2.1%. So that was a huge drop in a single day. Particularly for increased uncertainty related to coronavirus, domestic institutional investors and foreign investors sold Korean stock in a large scale.
Well, now we just heard about the profits at Samsung Electronics. They were down quite a lot in the fourth quarter of last year. There's also the concerns about the coronavirus affecting that company as well. What do you make of these numbers, and do you think Samsung will see a recovery this year?
Well, if we take a look back, the global semiconductor market, the market itself is really volatile. Sometimes demand increased by 30%, but some other years the demand decreased by negative 30%. And given that situation of the global semiconductor market, last year was one of the worst years in global semiconductor market after 2010. The weak sales of semiconductor decreased Samsung Electronics profit by 50% compared to 2018. It looks that global semiconductor market is recovering from the last quarter of the 2019. Actually, Samsung Electronics net profit is increasing from the end of the last year. So we can have high expectations of the semiconductor market recovery from this year.
All right. Well, in other news, we see the European Parliament has now formally approved the deal for Brexit, and that means the UK will leave the EU as of Friday. We've had some time, of course, to assess this situation, but how do you think Brexit will affect the global economy now that it's finally happening, and the Korean economy in particular?
Brexit procedure is finally completed with European Parliament's approval on UK's Brexit plan. But for months, however, there won't be significant changes in both UK and EU because a Brexit transition period is set to December 31st of this year, which is end of this year. If UK Brexit smoothly by building up FTA with each of EU member countries, the impact of Brexit would be very small. But as a worst scenario, UK Brexit with no deal, then internal trade between EU member countries will be decreased significantly. That means economic growth of the UK could be negative, and global economic growth could be decreased by 0.2%, according to the studies of Bank of England. But Brexit does not hurt UK-Korean economic relations because last year both countries signed on new FTA between the two countries. So Brexit's effects, economic effects on Korea is kind of limited.
Got it. Well, we'll keep a close eye on that situation throughout this year. All right, Professor Kim, we'll have to leave it there for now, though. Thanks so much for coming on and sharing your insights.
Thank you very much.